All right, so this webinar is going to be on broker relationships for apartment syndication. And for those of you who have been following us a while, obviously you know who I am. You've also probably seen Brandon. He's been a guest on here quite a bit and doing some fill-in stuff for me. He's actually one of our other managing partners with PassiveInvesting.com. And we're going to go over today this broker relationship, because it's one of the key relationships to a successful multifamily investing firm. And there's two different things I always talk about that you need to have in place whenever you have a syndication business like this. First, you have to have broker relationships because you have to have deals, right? You have to have deals. Well, if you have a deal, but you don't have investors, then you're kind of stuck, right? So all at the same time, you have to be finding investors and you have to be finding deals. And so thankfully with our partnership that we have with Danny, myself, and Brandon, we have a kind of a separation of duties, if you will. And my kind of role and responsibility of the group is primarily to be able to, attract new investors to our group. And Brandon's primary responsibility is really on the acquisition side. And so I've invited him on to kind of help us with this idea of building broker relationships. And so we're not going to go into too much detail of our background, but you can easily go to this website, PassiveInvesting.com. For those of you who are joining us live, sorry about that. For those of you who are joining us live, I'm going to type into the chat box here. If you wanted to take a look at it, you can go to PassiveInvesting.com. And then if you click on the Meet the Team at the very top here, you will see our team that is listed out here. And so you can find my information here. Of course, Danny's is here as well. And you have Brandon's here. If you click on the name of the person, you'll see a bio video of them actually talking about their background and what they do for our group. And if you're interested potentially in joining us on some of our future opportunities, you can simply click on this button on the top right-hand corner of the page, and there'll be a form that you can fill out to join our passive investing club. And I would love to have you part of it. And so enough about that. I'm going to go ahead and have Brandon go ahead and kick us off here, because most of the time I get questions on these webinars, Brandon, about where's the PowerPoint, where's the presentation? And that's not usually how we work. We usually like to just have these kind of conversations and discussions around these different topics. But if you have questions as we're going throughout, please type it into the chat box or the Q&A box. We'll be monitoring that throughout the webinar today. So feel free to have some interactions with us and some communications. And we're going to dive into this idea of building broker relationships. So first off, Brandon, talk to us a little bit about how do we find brokers? Like somebody who's like, they're totally fresh. They have not even gotten started yet. What is the best way for somebody to really start to find brokers? And I think sometimes people might think it might be harder than it really is, but what's one of the first steps that you would do if you were back down to square zero and you're trying to find brokers?
Yeah, our model was to look at the markets first that we were interested in. So the city, the state where you want to buy properties. And then you can do a simple Google search of multifamily brokers in, let's use Charlotte for example, multifamily brokers in Charlotte. And you'll start to see firms listed or individual brokers listed. And what we did was just kind of go down through that list and make phone calls and set up appointments with them just to grab a cup of coffee, introduce ourselves, tell them what we're looking for, what our criteria was, and get ourselves in front of them face to face. Let them ask you some questions. They want to, usually they'll want to know, stuff about capital and stuff like that. So we answer those questions, but really just getting in front of them, letting them know who you are, building that first step in that relationship is crucial. I think back to when we did that ourselves. I remember the trip distinctly. I think we looked at 20 some multifamily deals and met with, 5 brokers. I mean, it went into the late evening before we got home. And then we did a meetup.
Was that the day that we got stood up by one of the brokers?
We did, but we have, we've rectified that, and we've done business with them since then. But, just today I was thinking about a deal that we're working on right now that was from one of the brokers we met on that trip. Mm-hmm. I remember sitting in their office, explaining to them who we were, and actually they gave us a deal that day. It said, we just released this today. Here's this deal. It's funny you come in because this is it, and it's in your market. And what do you think? And that was our first deal.
So that was before we had any deals under our belt.
Yeah, that was zero experience, and that was just getting in the car, going and meeting these people. getting to know who they are. And then, from there, it starts to snowball and you start to meet other parts of the team. But step one, get on Google, look up in the city you're interested in the market you're interested in, and find out who's selling deals. It'll come up. It's pretty easy. And then just don't be shy. Get out there, meet them. It's a little bit intimidating. I'll say that at first, because if you're new, right, you don't know as much of the lingo yet. And, they may hit you with a question you might not know the answer to. But, that comes with time. Do your research, do your homework, know what you're talking about before you meet with those brokers, because that's going to be key. But just get in front of them, take that first step.
I remember one meeting, Brandon, that we had where, and you'll remember it too, we had to go through security and had to go up an elevator, go all the way to the top. And this is the one that we just recently transacted with. And I remember sitting down and talking with them, and you could just tell they were like, these guys are never going to do anything. We see these people coming all the time. And they even kind of touted the fact that, well, we don't really even mess with anything that's less than 20 million. So we're usually like 20 million and above, our sweet spot's like, 40 to 70 or even higher, and I remember sitting there going, we're going to prove them wrong. We're going to prove them wrong, and thankfully we have. So.
Yeah. It's funny to come full circle on that same meeting. This is a different brokerage group than the one I mentioned on our first deal, but this brokerage group, we recently had a call with them, and that's the very same person who's head of operations for the Charlotte office, got on a conference call with all their team and was like, man, you guys have really come a long ways. You really have impressed us. Like, we didn't, he said,
we have brokers calling us now.
Yeah. I've had several calls this month where, hey, we want to get our whole team on the phone with you guys. We want to know what you're looking for. And so now it's reverse, but it started with that first step, us reaching out to them, and now they're all over us. So, but it's in any endeavor, the first step is the key, is like taking action. I was on a podcast recently and I was telling a little bit of my background story and my life journey. And the interviewer asked, what is the thing that kind of tied it all together, or that like made everything happen? And my answer is always action. There's so many people. I was talking to some other people this week, trying to get them started down their financial road, and they read the books and they understand, or they listen to a webinar about broker relations, and that data is stored in the back of their head. Yep. They understand it. They comprehend it. They get it. They know it's right, but then they do not take action. And so that's the number one key to that first step.
So there's a question coming in. I'm going to kind of this is very applicable to what we're talking about right now, these beginning steps. Well, one's coming in from Rogelio, and he's asking, can one expect reasonable attention from an experienced broker when one has little or no experience?
I'm trying to think of the best way to answer that, because yes and no. It depends on what you're bringing to the table. If you're coming in there and you don't have any investor base, or you don't have any capital yourself, those are going to be negatives, and it's going to be a little bit harder. Now, it does depend on what size of deal you're looking at. So if you're starting out in the 50, 80 unit range, you're going to have less of that. It's not going to be quite so snooty. I'll use that word. But once you get up, in the $20 million range, they definitely are going to be checking on you. Where are you getting your money from? And, those are questions that they ask. The number one question that was asked in those first meetings was, where does your capital come from? And so they will give you the attention. They will meet with you. But you do need to tout some credentials. And so how do you do that? Like, how do you buy a deal from a broker if you've never bought a deal, if they want you to have bought a deal before they'll sell you a deal? That's the whole idea. And the best way to do that is to get involved with the syndication group. Number one, if you can get involved in the GP side of one and have less control of it and get some experience that way, and have it under your portfolio, or be a passive investor on a deal. So you understand, and you can say, oh, I'm involved in this many, I have this many doors in my portfolio, because the deal, you've underwritten the deal, you've invested in the deal, and that gives you experience in the space. So, they're willing to listen to you, but definitely come with some type of experience level.
Well, and I think from our perspective in the very beginning, we really didn't start reaching out to brokers very heavily until we had partnered with a few other groups first and had a little bit of a track record ahead of time. So when we reached out to these brokers, it really wasn't our first deal, even though it was our first like deal we did by ourselves, but we had already kind of co-GP'd with a couple other groups and built a track record for ourselves. And I think that definitely had an impact. And the question about where is the money coming from, 'cause that's really what they ask quite a bit, which was what Brandon was saying, is they're asking, hey, where is your equity coming from? Not like, is there one person on your team that can swipe a check for it? I mean, that'd be great if you had that, right? But most of us aren't coming into that with a syndication model. And you're going to have to come to them and tell them where your investors are coming from. Like we had to talk to them and tell them, say, hey, these are the types of investors that we have. We had to tell them, say, they would ask us and we would say, well, our investors are high net worth investors that are individual investors. We do it via syndication. We raise all of our money from contract to close, and they're familiar with that model. They're familiar with that, but you have to explain to them about that. Now, again, it wasn't the first time we had raised money from our investors. So they asked us after that. We told them that, well, how many times have you been able to raise money from your investors, right? So if you've never done it before, you might have to say, well, we haven't actually done it yet, but we've received commitments, right? So it's all about being confident with your answers as well. But if they feel you're kind of wishy-washy, going back and forth, then chances are, they're not gonna give you much time a day. Now, one kind of tip here is if you're trying to fine tune building relationships with brokers, go to a market that you're not necessarily interested in, right? That's maybe a couple of markets away from the one that you really want to be in, because then you can go have conversations with brokers, and whether they be in person, over the phone, virtually, whatever, and have conversations with them. And those encounters will help you. And then you're not worried about losing a relationship, right? Because they're 2 or 3 markets away from you. And the reason why I say 2 or 3 markets away is because here we're in South Carolina. If you talk to a broker here in South Carolina, they're going to pretty much know all the brokers in South Carolina, North Carolina, Georgia, Florida, Tennessee. They're going to know all those other brokers, and they're going to talk a lot. But once you get about 1 state or 2 states away from the markets you want to be in, you're not really going to have a lot of overlap there with those brokers communicating on a regular basis. So you're not going to ruin your relationship if for some reason you botch an initial conversation with a broker.
Yeah, and it's very important to not ruin that first impression, because that is the most important. One of the questions too, as far as like equity, where are you raising capital, but also where's your liquidity and net worth coming from? That's another question that they were looking for. Do you have a loan guarantor? And if you do, you could just say, oh, our GP has a net worth of this and liquidity of this. You don't have to tell them, we're paying a fee to a loan guarantor, to get this done. You can just say, oh yeah, we got it taken care of. We have this much. We can take down a deal of this size based on this liquidity and this net worth valuation of our group. So that was a big question that everybody had for us. Like, who's providing the backing for these deals? So when you put one under contract, let's say you have investors, right? And we give you a deal, can you get a loan for it? How are you going to do that? So that's really what they're looking for, because you have to have a net worth equal to the loan amount of the deal and 10% liquidity of the loan amount of the deal in order to purchase it. So that's kind of a moving target. It definitely grows as you acquire more properties. That number is going to increase. So you can go after bigger and bigger deals. But to start out, you just start where you can. Whether that's, a fourplex or, 50 units or, wherever, you get in where, but that is a question they're going to ask.
So we've now found these brokers. We went online, did our little search, found a list of brokers, like true multifamily brokers. Now we're kind of in this beginning stages. And what are some of the first steps somebody should take in really trying to truly build a relationship with some of these brokers?
Well, after you meet them for the first time, you're going to want to get on their email list. And that's what we did in those initial meetings. They're like, okay, we'll put you on our broker list, our deal flow list, right? So you're seeing that going. And then, touching base with them whenever you see a deal come out that fits your criteria is, email, pick up the phone. I try to respond to a deal offering within an hour of it coming out. If I can, I'll do it within 30 seconds. I'm right on top of it, because I want to be the first name that they see when that deal comes out. And the other thing too, with broker relations is, they don't want their time wasted. And so if you're, just kicking tires and looking at every single deal that comes across, and it's ranging from value add to core to, from 1970 vintage to 2019 vintage, they know you're probably not serious because you're not buying in that range. So have your criteria in mind and only respond or go after deals that fit your criteria. That'll make you appear more serious in looking at deals. Somebody asked too, like some of the lingo that you need to know when you meet with the brokers. They're going to ask you what kind of returns you're targeting and also what your model is, whether you're a JV or a syndicator, and, what are your IRR targets? What are your cash on cash targets? What kind of equity multiples you're looking for? Those are terms that you need to have down, roughly. Give a range, obviously, because not every deal is going to be the same. So everybody has their range, whatever market you're buying in, or whatever, if it's tertiary, it's going to be a higher cap rate. If it's, so just know that when you go in, what that number is, because they're going to ask you about those. And they'll tell you, I don't think you're going to be able to hit that in this market or on this deal. I don't think you're going to be able to hit I'll use kind of a crazy number now, like 18 or 20 IRR, in this market, which is obvious now, but I'm just saying, know those numbers and be firm on your criteria. When we went in the first time, at that point in time, we were looking for a little bit older vintage. We want this year from this year. We want these we're looking at these markets, we're looking at this door size is what we said at that point in time. We've now changed that to deal size, actual dollar amount in our criteria. Whether it's value add or core meaning it's just cash flowing. You don't need to put any capital into it. So just know all that before you go.
Yeah, I just typed into the chat box here for those of you who are watching us live here, a couple of links. One to finding a market, finding deals, some webinars we've done in the past. I just did one on there on multifamily terminology. And that way you can kind of brush up on some of your multifamily terminology. Because I always say that one of the best ways to learn a new language, because this multifamily, space is definitely a new language because there's so many different acronyms and terms and things like that, is you have to immerse yourself in it. So the more you can involve yourself in watching, video content online or podcasts, or even, I know right now with COVID, it's a little bit hard because of the in-person meetings, but so now more and more in-person meetings are starting to happen. And so trying to involve yourself in some of those in-person live meetings will help you continue to sharpen your tools. But you want to make sure that you have the terminology down before you meet the brokers. Because they're gonna know right away whether or not you are serious or not by how well you actually can speak the lingo, as somebody mentioned earlier on. So it's definitely a very important piece of it. John has a question here, Brandon. Says, so when in the relationship does it change from them stating the pre-COVID requirements that you need hard money day one? And for those of you who are new, we're not talking about a hard money loan here. We're talking about the earnest money deposit that goes hard, meaning it's actually non-refundable from day one when you sign the contract. And so he's saying, at what point do they go from stating that you need that requirement, which is what used to be before COVID, and that you will be facing lots of competition to the broker providing off-market deals and being truthful about what it would take to actually take down a deal?
It's on a deal by deal basis as far as the hard money is concerned. But I'll touch a little bit on the hard money first. As a syndicator, the need for hard money is greater than if you're a JV. If you have equity in the bank and you can show them funds, I'll use the term proof of funds, but that isn't really an accurate description of what we're talking about. But they want to know, if we go and close on this deal, do you already have all the money raised? If you don't, if you're a syndicator, which is what we do, we start raising, after we get it under contract, there's a little bit of question in their mind. Are you going to be able to raise all this money? And it's going to come down to, have you raised this much money before? If you have, they're more confident in your ability. If you have not, they're less confident in your ability, and they may want hard money, non-refundable earnest money day one on the deal. Pre-COVID, because of the competition and because of the stability of the market, hard money was a normal thing, and it was substantial on deals. At the beginning of COVID, that went away completely because nobody knew what the market was going to do. I mean, so there's no way I'm going to put refundable money on a deal where the interest rates are fluctuating a point over the weekend. There's no way, because that deal will not work anymore if it fluctuated a point. So hard money went away. As the debt market has stabilized now and is still trending downward in interest rates, the hard money is starting to become viable or a necessary thing these days. And so when you're negotiating a deal, it's not just price, it's also terms. Hard money is part of those terms. So if you maybe can't reach where they want to be completely on price, you can maybe meet them on terms. So, that hard money is a good way to do that. So, okay, I'm not going to give you what you're asking for on price, but you know what, we'll give you, 1% hard money or something along those lines. And use that as a negotiating chip, especially if it's somebody you've never worked with before, like a broker that they've never sold you a deal before. They're a little unsure, and their model is pump out deals. They want to close fast. They want no hiccups, and they want to just get it out the door. So if you have hard money invested in the deal day one, that makes you less of a risk. And that's just a conversation. To be honest with you, when you get to the point where you're having a personal relationship with these brokers, and it's personal business, I'll put it that way. It's not like I'm best buds with any of these guys, but I am friends with most of the brokers. I will say most, because not all are as personable, but
not everybody likes you, Brandon. That's what it is.
Right. I mean, most people do. I mean, if they don't, there's something wrong with them. That's always what I say. But, so we'll go golfing or deep sea fishing or whatever, and try to get a little bit more on the personal side of things, so we can have candid conversations about stuff like this. And I'll just call the broker up and say, hey man, what do you think they will say if I come back with these terms? Before I put it in writing, before I put it in an LOI, what do you think about this? Well, I think they'll go for that. Or no, there's no way they're going to go for that, so don't even try. I think that they would go for something like this, and you can kind of have that conversation and kind of do a pre-negotiation before you actually put it into an LOI. And that's where that personal relationship is it's golden. To go back to when the deals are coming out, when you see a deal come across and I'm trying to respond quickly, one of my first response to a deal offering is always, what is the guidance and when is the CFO? CFO is call for offers date. That's the first thing I ask. And here's the reason why. Because I don't want to waste the broker's time. So if I can do an initial underwriting based on their guidance, now granted their guidance is going to be a little bit inflated because they want to get the most they can for the property. But if you're not able to hit that around that target, like pretty close, you're wasting their time most of the time in our space to submit an LOI. You just are. Okay. And you're just going to be white noise to them. So don't waste their time. Get that guidance. Just say, what's your guidance? They will tell you it's this much per door or it's this much total, overall deal size. Put that number in your underwriting and use that for your target goal. And but I mean, obviously don't offer that, unless you're super confident, but if you can't make it work with their guidance, don't bother. And a lot of brokers have told me that. It's like, oh man, we got these people, they're offering, $3 million below our guidance. It's like, why are you even submitting on that? It's not that market. It's not. So make sure you get that from it, and then call for offers. That gives you a little bit of time frame because it's all over the place as far as how long a deal will be out. I've seen deals do call for offers within 2 weeks of the offering, and I've seen them go 60 days. So it just depends, and you need to know that. A lot of times in that first initial response, they'll say, we haven't set a CFO yet, especially with COVID. Right now it's affected a lot of stuff. Tours are not the same as what they once were. And so, just keep that in mind. Don't waste people's time. Be courteous is what I'm trying to say. Be courteous of their time.
One of the other things along the same line, someone had asked a question here. Marty asked about the CFO. Can you explain the CFO, what that is? Kind of, I know you mentioned call for offers, but what is that call for offers? How does that work? And at what level do you usually see that? Do you usually see it on some of the smaller level properties, or is it usually kind of on the higher end properties?
Yeah, so CFO is going to be a term that applies to fully listed deals. In other words, you're on their email list, you saw this email come out, and they're setting a firm call for offers date. And what call for offers is the date at which your LOI needs to be submitted to them. So pre-COVID, it was, set up a tour of the property, meet the broker out there, look at everything, ask any questions that you had, do the underwriting, submit the LOI on the CFO date. I'm always talking to the broker on the CFO date. Like, I don't submit in the morning on the CFO date. I submit at 5:00 on the CFO date, because I'm trying to get a feel from the broker where people are coming in. Because a lot of times they'll say in the beginning, oh, my guidance is, whatever, 150,000 per door. But maybe the market just wasn't as strong as they thought. Their opinion of value was higher than it should have been. So as it gets closer to CFO and they're starting to get offers in the morning, these people that are sending in offers early, I'll call them up and say, okay, what's the temperature? Is it coming in? And sometimes it'll change and it'll go down. And so, I'll shoot for this, but it looks like it's, the cutoff for best and final is going to be, lower than what I thought. And it's going to be 148,000 per door now. Okay. And so that helps you a little bit, and you can adjust your LOI real quick and get that submitted. Another question that I'll ask on CFO date, or actually as we get closer to CFO, is what is the cutoff for best and final? Okay. So that's another, the language, best and final. CFO date is where everybody offers. Anybody that looked at the deal, anybody that got the email, anybody can make an offer. Best and final is the round two, or the finalist, if you will, for a deal. So on an average deal, nothing's average right now because of the way things are, but pre-COVID, average deal was 40 offers, at CFO date. Best and final is going to be around 5 to 10 people. So it's the top offers, or the most, not necessarily the top offers, but the people they're most confident in, they're going to take them into best and final. So my question is always, what is going to get me into best and final? And I'll hit that number, and then we'll sharpen our pencils on underwriting once we get into that round. And that way we're not spending a bunch of time on something we're not even going to make it to the final round on. So CFO dates, call for offers, and then best and final, they'll set another best and final date. And so that date is much like the CFO. It's going to be when your offers are due in the best and final round. And then you'll submit that, and then they'll say, okay, we'll have an answer to you by, and they'll give you a time frame. And then after that, there's often a third round, and they'll always tell you, no matter what, there won't be a third round. I promise you, there won't be a third round. We're going to pick their motivated sellers. Yeah. I've yet to see that happen. It always goes to a third round, and in the third round, it's usually two people. It's your top two contenders, and you're battling out over terms and price. So the broker's trying to pump the number up as much as possible, because they work on most work on hockey stick commission. And so what that means is, if they set the broker's opinion of value, let's just say the deal's worth $20 million. They say the broker's opinion of value is $20 million. And they say, okay, if we sell it for 19 million, our commission is 1%. If we sell it for 20 million, our commission is 1.2%. If we sell it for 21 million, it's like 1.5%. So it goes up real quick for small amounts after they hit what you need for, or you want for the deal as a seller. So in that third round or best and final round, they're trying to get as much, they're trying to squeak out as much as possible on that deal. So those are the basic rounds.
So Jerry has a quick question here on, is it okay to try to establish a relationship with more than one broker at a time?
Oh, for sure. Yeah, you have to. I know all the brokers in the Southeast, every single one from every single firm. I've met them in person and I've talked to them on the phone. Yesterday, I spoke with brokers from every single major firm in the Southeast multiple times about multiple deals. I spoke to one broker 6 times yesterday, another one 3 times, and then a couple of the firms I spoke to one of their brokers each time. But that does remind me of something about broker relations, is learning how the firm works as an organization, because they do not all work the same. So a lot of times, a firm, I'll throw out some names of the major brokers. There's Cushman Wakefield, Capstone, JLL, Berkadia, CBRE. Those are the well-known brokers in our space. And each one of those has a team. It'll be either the Charlotte team or the South Carolina team or North Carolina team or something along those lines. So each sub-region will have their own team of a couple of people. And so you need to know the team for the areas that you're going after. But then you'll have some firms that they split the commission across the whole entire, Southeast team. It's not just the Charlotte team doesn't just get that commission. It's Charlotte and Columbia and Charleston gets all that commission. So that's very nice because it helps us to work across company lines, and they're very open. So, they don't mind sending you up to the guy in Charlotte because your deal in Charleston didn't work out and said, oh, you know what? So-and-so on our team is up in Charlotte and he's got a deal I think will work for you. And they don't mind sharing that or passing you off because they're still going to get a piece of that pie. Whereas some of the firms are more franchise kind of based. They're under the name of a brokerage, but they're very segmented. And so there's not a lot of conversation back and forth, like between the Florida team and the South Carolina team. They're like, oh, who's in Florida? I don't even know that team, because they're more like franchise ors. So, that's something to keep in mind and know kind of how they function. And then each firm has its own nuance, so it gets not complicated, but you need to pay attention to this. So you have your uppity firms and you have your personable firms and you have your casual firms, and you need to know how to react or respond or interact with each one of those firms based on how they present themselves. We have firms that are very formal, suit, tie, the whole nine. And then you have some, they'll show up in shorts and collared shirt, and it just, you need to know what you're dealing with. So that's all part of, that broker relation. Get to know who you're working with.
So Warren has another question here. I'm not sure if it was another, but he has a question, which is another one of our questions. Do you have guidance on how much you would move on price in the best and final?
It's really hard to quantify that. It depends on the deal size. I don't really have it nailed down to a percentage, but it's a small amount. It's marginal. We always say we're going to leave a little fuel in the tank or a little meat on the bone for best and final round. So when they give us guidance, we're going to come in as low as possible. That's why I asked for that best and final cutoff, because I want to just make the cutoff. Okay. And give me as much expansion as possible in the best and final round. But that's not going to be crazy. I mean, because if you come in, on a $20 million BOV deal, that's the guidance, $20 million. And they said best and final cutoff is 19. And then it gets into best and final, and all of a sudden you jump up to 21. They're going to not be very confident in your underwriting ability. Because they're like, how could you swing that much if you're coming in, or they're thinking you're playing with them a little bit on, and you can do better, and you're just, so there's really not that much room to play when you get up to that round. It's marginal.
So this is another question came in from Hamad just as we were talking about this, saying, for that initial offer, do you have a rule for how much under your max that you will present in your offer? Like if you've wrote it and you said our maximum kind of strike price, if you will, was 19 million. How much under that would we actually offer?
There's no hard fast rule on that. It really just depends on where that best and final cutoff is. You know, if it's at our max, it's at our max, and we'll get into best and final. And who knows? Maybe they just like us better than another group, and they'll give it to us for less than another group. That does happen. It's not always price. It's also ability to close and confidence. So I'm not going to decline to go into best and final because I have a very small margin of expansion on my purchase or my offer price. But you know, the more the better, obviously, to really push yourself ahead of anybody else out there. But there's no hard fast rule. I mean, we've had it, you know, very close, a few 100,000, and we've had it, you know, within $1 million. So, you know, when you're getting up to that range, those small increments don't really move the deal as much either.
Have you ever thought about obtaining your broker's license, and have you ever run into negotiating broker referrals for your deals? What would be the best way to do that?
I have not ever thought about getting my brokerage license. That sounds like a job to me. So, you know, I mean, this is what we do. So I try to focus on what we do. So, you know, you go back to like the Henry Ford model, you know, intelligent people surround themselves with intelligent people. And so we surround ourselves with brokers that know what they're doing. And they've been in the space way longer than we have actually been in that particular market. You know, I don't know Raleigh is, you know, I haven't been buying and selling multifamily deals in Raleigh as long as they have, right? So they know the people, they know the movers. Lean on their knowledge base years and years, because by the time you got your broker's license and built that knowledge up, and it's time to retire already. So, you know, it's not something that we pursue. I'm not saying it's not something that you should, but just saying I wouldn't mess with that. That's a lot to undertake.
Do we ever go direct to owner? Do we ever go direct to owner, or are we usually pretty much 100% all broker relationships?
We go direct to owner in conversations about interest to sell, but when it comes down to the actual transaction, it's always involving a broker, because they also are trying to maintain broker relations in the buying and selling of deals, and we're trying to not bite the hand that feeds you type mentality.
And we're talking about in this is really in that $20 million plus space that we're talking about. So. A little bit different than trying to go try to find an institutional seller or owner to try to sell you their property when it's a, you know, $40 million property. Most of the time, if not all of the time, they're going to get going through a broker.
Yeah, I mean, they probably won't even talk to you, to be honest with you. You know, if they wanted to sell, they would already have it listed or have a BOV, and it'd be out with brokers. Or that broker would have contacted you if you're a big enough player, you know, to warrant you looking at the deal. However, that being said, we do know some owners, and this is part of the growth process that we also build relationships with. So when they have deals, they do speak to us and tell us, hey, we're thinking about selling this deal. We're going to use XYZ brokerage firm. Are you interested? Okay, I'll have them send you the numbers on it. So it does work on that level, but it's still transacted through a broker. So, you know, you want to remember that you want to be in this space for a long time. It's not a single transaction. And multifamily is a very small industry. Everybody knows everybody, and your reputation is everybody. So you want to try to keep as many people, you know, you want them to hold you in a good light as much as possible. So we keep that in mind when selling properties, when buying properties. Again, one methodology that we use, and this is something that everybody's different, right? But if a broker sells us a deal, we would like to use them to sell the deal, because they are the ones that brought it to us. They helped us transact it, so we want to return the favor and let them sell the deal for us. So they get commission, you know, when they sold it to us, and they get commission when they sell it to someone else.
And we learned that from institutional owner that we had actually bought a property from. And they actually told us that, and it said that that's one of the keys to their success.
Yep, keeping everybody happy. And I had that conversation yesterday with a broker on a property, and you know, they were asking some questions about some of our portfolio, and I told them that's our model, and they totally, oh yeah, totally understand. He kind of joked a little bit about the other group, those guys over there. He was just kidding, but they understand that, and they have no issue with that. And if you just put that out front and just say, this is how we're doing it. Hey, you brought us this deal. When we go to sell it, we'll use you, but they brought us this deal, and so we're going to use them. It's just the way it is. Unless that person or that firm is no longer viable, then you might change that model. But other than that, that's what we strive for anyways.
So I know we got a lot of questions coming in. I'm not going to be able to get to all of them today. Some of them are really good questions, but I want to cover this last question that we have on the agenda for today, and then we'll go ahead and wrap things up today, Brandon. But the last question that we had, and we wanted to make sure we answered today, was when is a good time to actually ask for these off-market deals?
Always. At all times am I looking for deals.
You might not get them as much in the beginning, but you always ask for them, right? Because you want to make sure that they know you're asking for those. Constantly checking, especially through COVID, because the deal flow, the on-market deal flow just ceased. Nothing. It just quit. March, no deals at all. It's almost back to normal now as far as marketed deals. But during that time, I was really, really, shaking the bushes for off-market deals. Then we put a lot of LOIs out during the last 3 months on deals, on off-market deals, and, nothing panned out, but it's okay. That's that's my job. That's what we do. But one thing that I have noticed in my broker relationship experience is when I haven't talked to a broker in a while, just picking up the phone and just having a conversation. Hey, how you been? What's going on? Anything new coming up, anything, you think we might be interested in, and making that actual phone call conversation. All of a sudden, here's like, oh, well, there's this deal and there's this deal and there's this deal. And what it was, it's not that they're ignoring you. It's just that they've got a lot going on, and, they deal with a lot of people. And what happened was I just put my name right in front of them, and I'm having a conversation. It's like, oh yeah, man, I should have told them about this deal. Or, hey, I'm getting ready to do a BOV on this deal. I'm glad you called. It's so great. And when I make those phone calls, it's amazing. All of a sudden, here comes an email. And, we might not get anything out of it that we end up buying, but it's keeping that relationship going. It's the same type of mentality we use with our investors, right? We want to keep in contact with them. We always want to be like the person, the name that's coming up in their mind when they think of investing, right? That's, and same thing with broker relations, making that phone call, sending that email, sending a text message. I have this personal cell phones of all the brokers. I text them a lot. They like that sometimes because they don't check emails as often as they do text messages, but just reaching out and getting them to answer what they got going on. And I ask them, hey, what, how's life? You going on vacation this summer? So I had one broker. I was putting an irrigation in my own yard, and he's like, man, I need to ask you a question. I'm trying to put irrigation over here, and I got this, and this. And I answered his question for him, and helped him out and saved him a little bit of money. And then I was like, so you got any deals coming out? So it's not all of it. And that was one of our more formal firms, very business-like, and, trying to get down to that personal level where I'm asking about, his this one person's relative had COVID, and they were concerned because they were elderly, and so, check in on, I'll just call them and just ask how they doing, how's everything going, and didn't even ask him anything about business. And, I am truly concerned. I don't want anybody to think that I'm just doing that for business purposes, but I am too. It's smart business. But I'm doing it because I'm concerned, and I built that personal relationship with them. So all of that stuff goes a long ways into, when you get into a deal and it's you and 3 other groups, they're like, man, I really like this group. They're just good guys. They're honest. They don't waste my time. They get stuff done. I think you should give the deal to them, and the owners listen to the brokers. So. Well, Brian, I want to thank you so much for your time today, coming on and sharing all of your knowledge. I know we could probably spend another couple of hours talking about broker relationships. We kind of touched the tip of the iceberg, if you will. I really do appreciate you coming on and sharing all of your knowledge and expertise here.
Glad to be here. Appreciate it.
Awesome. Well, next week we do have another webinar scheduled. It is actually going to, the webinar page first on my side is not updating just quite yet, but it's going to be on securing capital from passive investors for apartment syndication. So we're not talking about raising money or raising capital. We're talking about securing capital. So you've been finding all these investors, you have them on your list. Now you have a deal that's been awarded to you. What next? How do you secure that capital? So that's what we're going to be talking about next week. So it's going to be next Thursday, same time, 12 p.m. Looking forward to having you there. And again, thank you so much for being here, and we'll see you next week. Talk to you later. Bye-bye.